Good evening, folks, to you up in the Northern Hemisphere, and good morning to those down under, just after 10:30. Clear the lungs, excuse me, just after 10:30 in Australia. That'll be 12:30 where our friends in New Zealand are. Sage, oh good, loud and clear, thank you very much. We've had a Peter in Auckland. Hello, mate. Uh, we've had a great month's trading, haven't we? I mean, it's been absolutely extraordinary. Any of you who don't think we've had a great month's trading should talk to Sister Sage and Mustang, very long time DC members. I had the pleasure of doing a video tutorial with them during the week, and you'll know that we did our LA summer tutorial in El Segundo and Manhattan Beach a fortnight ago. I'm now back in the sunburnt country, 23-hour trip back here. So please don't complain the next time we have a tutorial somewhere about your trip. It can hardly be a lot worse than what the Aussies and Kiwis face. Nonetheless, I did something new a few weeks ago. I did a tutorial by video using GoToMeeting with Dr. Dave over in the UK. He was coming to the LA tutorial, and because I changed the dates, he was unable to get leave from his practice in London. Would have meant too few people being available, and I didn't want to disappoint him, so I did a tutorial by video with him. And this week I also did the same thing with Daryl and Glennis, Sister Sage and Mustang on the forum, and very insightful. I've just got a little note from Glennis saying here that after we'd done that tutorial, she was rewarded with a blinding flash of inspiration as to how to enhance her lunar chants and moonbeams. And Sage is a very canny lady, a very, very good trader. So we'll look forward to what she's going to tell us about that. So really good to have so many of you here today. Lots of old friends as usual, and a few new ones, and some of our tutorial guys have made it. Brian up there in New York, I know you, good to hear from you. I've got a couple of emails from you I haven't replied to, but I'll be doing that. Brian, I think we need to have a talk as well. Lots of exciting things happening. My old friend David Webb, he's the Black Line King. Daryl over in Mossman. Oh my goodness, lots of people. Lots of people here. Good to see you all. Graham over in New Zealand. Chip, my mate. Oh, we excuse me. We had such a good time in LA. We had a great crowd. We had some very interesting people, very high quality caliber people. We had some guys who've been big time hedge fund managers, futures and options traders. Three of our people there are people who hold securities licenses as risk managers for state governments, big corporations, worked with numbers of brokers before. You know, we had a pretty critical audience. We had some of the smartest guys we've ever had tutorials there in terms of trading. Of course, everyone else who was there is equally smart in their own way, but we had some real high flyers, which was really interesting. And Chip, who's here with us today, brought a mate with him who'd never traded before, as far as I know. And I don't usually like to say the full names of members on these webinars, but I have to in this case, and he's a good bloke and a mate, and he's a rugby player, so he'll forgive me. But Chip said, oh, I'm bringing along a pal of mine, knows nothing about trading, but he's working in too hard in his business. He's a big time business guy, and I want to get him into trading. And his name is Hovey Kwa. That's all we know about him. And he's a rugby player. And I thought, Hovey Kwa, he's going to be a very, very small Chinaman, probably played halfback for Shanghai or something. You rugby guys will understand this. Anyway, Hovey Kwa turns out to be a giant. and he's a second rower, played rugby for many, many years, including in Singapore and all over the world. He's a marine engineer by trade, by profession, I should say. And Hovey's a giant of a guy, mad rugby player, big drinker, lots of fun. And I thought we were going to be having this little tiny guy, and he's a lovely person. The people you meet at the webinars, at the tutorials are fantastic. So some bloke called Steve Carpenter saying, please cut to the chase. Steve, you'll have to wait. This is my party, and I'll get there when I wanted to. But I want to, AKA Captain Hilarious. There's Matt, lots of mates here. Okay, so welcome. Glad to have you all here, and let's get on with what we're going to talk about today. We don't want to annoy Steve too much, or he'll leave us. Okay, so let's have a look what we've got here. I wanted to, your chart should have changed now. I wanted to really try and get some of you much more excited and thinking about these moon cycles. They're not the be-all and end-all, but the opportunities to use them in your trading are quite extraordinary. And what I'm showing you now is the continuous chart in COMEX Gold. The little marks on this chart, we need to thank Michael in Melbourne for this. He put together this little program to allow us to display some of these moon cycles. And I'm going to show you this on the a bigger version of it on the screen so you can see it, but it hasn't displayed terribly well here. You can see some little yellow dots, and they're full moons. And you can see smaller, darker dots, and they're new moons. Now, there are many, many cycles in the moon, in the lunar orbits, and it's actually terribly important to us because the moon exerts a massive gravitational pull on the Earth, and that's what causes tides. Now, if you think this is immaterial, I want you to just go and get a bucket, an ordinary kitchen bucket, and put a gallon of water in it, or preferably put 2 gallons of water in it, and that will weigh, a gallon of water weighs about 10 pounds. Hold it out sideways for as long as you can, and you'll get an idea of the weight of it. And then think about places like all over America, and some of the more notorious down this part of the world, in Mackay in North Queensland, where you have tidal rise and fall of 20 to 25 feet. So consider that, say about 8 meters, and over a length of hundreds of miles. You think of the tides moving in and out, and then consider that 1 cubic meter, which is about 10 cubic feet of water, weighs 1 ton. Or ton, so about a bit over half a ton in weight. And you can understand the massive amounts of gravitational pull that the moon's exerting. And for some reason or other, it's worked very, very well on charts. And I'll leave it to you to ponder why. But what I've shown you here is the most basic of the moon cycles, which is just full moons to new moons. And if you knew nothing else, and you can get all of this straight off various web pages, hundreds of them, you can see that I've just put some on here, not to get it too crowded, but there's about $85,000 worth in trade sitting there for the last 12 months. So I hope that's enough to get you interested and get you to start thinking about how you can use these moon cycles to enhance your trading. And you can think about all the other cycles. This is just one and the most basic, but it is a lot of money. And as we do more work on moon cycles, those who come to tutorials where we go into a lot more depth about what the moon cycles are, that the more subtle ones perhaps that dominate markets, it's quite extraordinary. Now, these are not trading signals, but they are cycles where if you lodge your trading signals inside these cycles, you are likely to be disproportionately rewarded, because you can see that they're very, very powerful. I want to now show you a long-term chart. You're probably going to read an awful lot about T-bonds. Deepak, I know you can't see those dots. I'm going to show it to you in a better version. They were too small. If you just be patient when I get to the charts. you'll be able to see those dots more clearly. This is a long-term chart of T-bonds. I showed this to you about a month ago, and those of you who come to these webinars regularly have seen it over the years. But this is a Daniel Code price and time chart that was started in about 2003, and you've seen it periodically since then. You're going to be reading an awful lot about T-bonds because there's some very, very big firms who are in trouble with their long-only positions in T-bonds, and they're now being forced to liquidate them to some extent, and finding that there's a lack of liquidity in the market. Because this is a bit like the property market. This is a classical situation where everyone's on the same side of the trade. And you can see, if you use the Daniel Code tools in a proper manner, how utterly orderly this market is. It's run within the blue line Daniel Code trading channel since 2000. It's the first line up, the thicker light you see in the middle there, that's the median. The next blue line up is one standard deviation. In Daniel Code language, it's not your normal standard deviation. It's a function of a Daniel Code ratio. And the next line above that is two standard deviations. And you can see that, remember, each of these bars, 24 trading days, is a little more than a month. There's usually 22 trading days in a month. But you can see that 2.5 months, 3 months ago, this market ran up for the first time since 2000 to two standard deviations, which is as far as most orderly markets go. Occasionally, when you get blow-offs in some of the commodities, it will go past that for a while, but not for long. And it ran up to that two standard deviations and ran into a Daniel Code time cycle that had been sitting on the mark on this chart since May 2009. And we'd seen it occur. I'll just get my highlighter here. We'd seen this, not quite the one I wanted, bear with me. I think they call it Spotlight. Here it is. We'd seen this 59 cycle come in here, and then we started a new cycle, and we saw this 59 cycle the first time bite here as a very minor high, nothing to get excited about. But how you run these Daniel Code time cycles is you observe them and then wait for them to repeat. So we observed that that actually did bite. We waited for it to repeat, and we got this important high here. Back in July 2012 was certainly important at the time, and that was time and a half, and this number sitting here, which has been on this chart since 2008. We've been waiting to see if it would bite, and of course it has, right at two standard deviations from the mean, which is what this upper blue line here means. We also had blue line sell signals for T-bonds that day for all of you folks who subscribe to our Plus service, but it looks like all the bond kings missed it, because now 2.5 months later there's a bit of a panic to liquidate down here, and there's an interesting story about PIMCO, the biggest bond manager in the world, was run by the very notable Bill Gross, who was excluded, sacked virtually from this massive powerhouse for company he founded, and they missed that high badly, and now they're trying to liquidate, finding not enough buyers. And interesting story in Zero Hedge today about how they've actually sold to a subsidiary of theirs, which is not really the same as liquidating. But the point is, we knew and you knew, and so I hope that you benefited from that. I wanted to just show you a couple of trading charts here, because the whole point of trading in the Daniel Code is there are a couple of must-haves that if you don't have them, you're missing out on all the things that are worthwhile in trading. And the main point is, you will have heard me say many times that all markets turn at the Daniel Code numbers. More important than that, markets only turn at the Daniel Code numbers. So if you want to know where and when a market is going to turn, you have to start with these numbers, and they're proprietary numbers. They're not fibs, they're not old highs and lows, they're nothing you've ever heard about unless you're a Daniel Code member, but you can see how dynamic they are, and just want to show you here how these markets turn. This is what we call a blue line trade. This is the most basic trade in the Daniel Code lexicon. It's all written up in the Daniel Code trading manual. It's available to all members, and we publish these charts with the blue lines and the red lines on them twice a week, and that's where markets will turn. If you don't believe me, we have a few new members or visitors here today. Go to the Daniel Code website and click on the link that says Chart Archives, and you can see 32,000 of these charts that I've created over the years, and you won't find any that turn anywhere except at these Daniel Code numbers. So if you're not getting these Daniel Code numbers, you are giving yourself no chance to be a superior trader. Now, those of you who've met me will know that I'm an attorney, a rather old attorney now as time marches on, but I'm not given to making big statements. But it is frustrating to me that we have so many of you interested in coming to these webinars who are not getting the benefit of the trading and making the money that the Daniel Code generates. So here's our most standard trade. This is called a Daniel Code blue line trade. First thing we need is price recognition, which we got here. That's less than 1/4 of a point away from the 147.08 number, which is within our 0.01% tolerance. The fast stochastic was oversold, slow stochastic was oversold, divergence on our proprietary momentum indicator. That set up the blue line trade, and of course, which we posted on Wednesday night for Thursday's trading. And these signals are posted about 2 hours after the markets close, or an hour after we get data from Trade Navigator, end of day data. So you had plenty of time to get set for this nice trade. Here's another chart. This is gold. I had a colleague I was talking to the other day who was telling me about some new amazing gold program that he was using, and he obviously wasn't paying attention, even though he's been a long time Daniel Code member, to what's been happening at the Daniel Code. So this is pretty simple for you. I've shown you here two of our blue line trades, the sell coming out of the recent high, the buy that happened earlier last week, and the two intermediate signals, one of which you'll see says correlated silver buy. And I'll just reiterate to you to pay attention, please, to the correlated signals. Gold and silver and HUI, which is the Unhedged Gold Producers Index, are so correlated that a signal in one can be executed in any other of them. And in the same way, all of the US equity markets, Dow, Russell, NASDAQ, S&P, and Germany's DAX, which we also cover, are also so highly correlated that a signal in one can be executed in any other of them. And if you did nothing else except trade these blue line trades, go trade blue to blue, you would finish up making an awful lot of money, and perhaps some of you haven't thought about that option yet. Here's another example. The E-mini's been wandering around for quite a while until the last few days, where it found enough momentum to actually move along and do something. But you can see here exactly the same blue line signals. I've left the stochastics and the momentum indicator on there so you can see it for yourself. Here was our blue line sell. The first element of which is you had to know this Daniel Code number at 2134, and the high of this bar hit that precisely. You had your fast stochastic overbought, your slow stochastic overbought, and look at the divergence here. The market's made a new high, the momentum indicator has not. That set up the blue line sell, and it ran all the way down to this low here, where we had two lots of signals. We had a correlated blue line buy in DAX. So if you have a blue line signal in one of these markets or any other signal, you can execute them in any other of the markets. So if you have a signal in DAX and you're not trading DAX, few of you do because it's about a $20,000, $22,000 margin, you can take those signals and execute them in the Dow, the Russell, the S&P, or the NASDAQ. But at the same time, on that day, we had a TO3 buy signal in the E-mini. So if you look at that simply with these blue line signals, we've got every penny from the recent high to the recent low. And if you don't do anything else, you can think about using just trading blue lines to blue lines. For those of you who don't want to trade too often or don't have the time to trade every day, have a look at these trading blue lines to blue lines. They're immensely profitable. Here's our next chart and the last one I'm going to show you, and this is called Just Trading the Blue. And this is the US dollar index. This is a very small contract with quite a modest margin on it. And you can see simply looking here, I've shown you the last three blue line trades in here, the buy, the sell, just under the high, and yesterday's buy. And there is about $5,000 per one contract in the last month for three trades essentially. Now, not a lot of you get the blue line trades or the plus signals, and it may be that you think it's going to be too much for you to handle, but really you're most welcome to have a free trial of these blue line trades and plus signals. And for those of you who only want to trade not too much or infrequently, have a look at just trading the blue line signals. And as I've been saying to you in recent webinars, these are the ones you want to try and hold. And we have a couple of techniques for holding these signals. So you can see here it's a pretty vigorous sort of a business, and certainly highly profitable. Okay, let's move on. Here's our compliance statement, folks, which I'm obliged to show to you with the normal disclaimers on it. Please take these compliance and disclaimers seriously. They're available at the website. In fact, they're plastered all over the website. And if any of you are interested in any of these products, you can organize a free trial at the website, or you can contact Terry at support@thedanielcode.com. He's up in Canada, so he works on US Eastern Time, and he'll be happy to oblige you with that. Okay, let's get out of here and move on to some of our bigger charts. So we can get rid of that and start looking at some of our bigger charts here. There's quite a lot of interesting things happening at the moment. I wanted to first of all run you through those moon charts because one of you said you couldn't see it. I'm sure you'll be able to see it better now. Those yellow dots on this chart are the full moons. The smaller, darker dots are new moons. And you can see for yourself here, just trading between those moons. Now, you need to know the direction of the trade and the directions of the signals which we create. You can certainly get that from the Fourth Seal, which is our Fourth Seal program. Not only gives you estimated turning points for these markets, but in the meantime also gives you a major trend direction that's largely unknown to others. So this is a think piece. This is for you to start thinking about. I've just highlighted and put the dollars on some of these trades so it doesn't get too completely cluttered. But you can see there's about $80,000 in 1 year from a contract that has a pretty modest margin. I think the margin on gold now, it's varied over the years from about 4,000 to 6,000. It's probably about 4,600, 4,800 right now. So there's just a massive return. From those of you who want to swing trade in a much more sophisticated way, this is one option, and this has been going on forever. It's kind of interesting what happens with moon cycles, that the obvious ones such as full moons used to work an absolute treat on the S&P. and then somebody wrote an article about it, not me, I assure you. And once the public knows about it, it tends to switch. It doesn't stop working, but it just switches to other cycles. But it's certainly worth some time thinking about moon cycles, and periodically I tell you a little bit about them, and if you come to a tutorial one day, I will teach you all about them. So they're quite extraordinary. Let's just, while we're on these moon charts, let's just run through a couple of other markets that are pretty interesting. Some of the natural produce, the commodities, are pretty interesting. This is corn, and you can see there almost every decent top in this market has come in on a new moon. Lots and lots of money there, and if you're a swing trader or an options trader, you can capture massive volume, massive value by knowing this. Strangely enough, for some reason, the Australian share price market, code for that's AP. It used to be called the share price index. It's now called the SPI 200 index. It works terribly well on these cycles as well, and for those of you who trade this market, I hope you've enjoyed our recent buy signal in this. I mean, the Daniel Code signals are absolutely deadly for those of you that follow them seriously enough, and we had a TO3 buy in this market for Wednesday and Thursday. So there's the daily bar. You can see there's just a nice lot of money in that. So you combine your blue line and TO3 signals with these moon cycles. It's pretty interesting stuff. Wheat is one of the other natural markets that are affected by moon cycles. Our ancestors, of course, relied on the moon for planting and harvesting and seasonality, and you can see that not a lot has changed. This is a market where the highs have been dominated by new moons, and you can just find any website that gives you these cycles, but then think that these are in fact what I'm showing you are the least important of the moon cycles. Now, you don't actually trade moon cycles, you trade the Daniel Code signals, but you can match moon cycles to them, and it's a great way to trade longer term. And the last one I want to show you, which is you wouldn't have thought would have been terribly reactive to the moon, is actually US T-bonds. And you can see here that both of these major highs, very important highs here back in January this year, this is a daily chart of course, or this next one that April the 3rd, both of these major highs came on new moons, and the money from those trades has been pretty enormous. So you know, it sounds a kinky sort of a thing. Don't go nuts on it. Some of you will be more intuitive about this than others. Sage, for example, is very intuitive about this sort of thing. Others of you, if it doesn't grab you, don't worry too much about it. But for the thinkers, you know, you can certainly use this as a tool to enhance your trading. And of course, we had a blue line trade in bonds today, guys. For those of you who got it, $1,500 per one contract in one day. It was very nice. We had a sell in oil. We had the blue line buy in dollar index. We had a sell in copper, which I think was pretty interesting. It doesn't actually resonate on moon cycles, although here's the end of a nice enough one. But there was, I mean, there's just trading this week, trading in the last couple of months has been quite extraordinary. There's an easy $1,000 in copper. Nat gas, we had a sell, made money. In fact, pretty well everything that moved we had. Wheat I showed you, but I just didn't show you the most recent trades. So here's wheat. That's again, this is a very, very small contract. Great for folks who want to trade contracts with small margins. We had a sell in wheat. Let me see, here we are. We had a TO3 sell right here. And there's your wheat sell now, 2 days, $987. I think the margin's probably not much more than about $1,400. So if you try and reflect these things at a percentage of margin, they're really quite extraordinary. So I hope that I've got the message across to you that here's this trade navigator is going to die. We'll let it close and open again. The joys of technology. This might just take a moment or two to open, folks. And while that's happening, I want you to just think about these opportunities, because some of these things that are not so well known about trading are really quite extraordinary, and they can give you a real edge in your trading. And don't forget, with your trading, it's not so much about signals. We give you all the signals. Between the blue line signals and the TO3 signals, we miss very, very few. Those of you who've been with us for a while will know that. So what I'm talking about there is not generating signals. We do that for you. Those of you who've done tutorials will know how to do that for yourselves in due course, if not already. Here we are. We've got our charts back, somehow or other it's moved itself onto the Russell, but that's all right, because we're finished with that anyway. So interesting, in the conversation I had during the week with Mustang, that's Daryl. He's a guy that I taught trading to before the Daniel Code was even publicly released. He's done, I think, 4 or 5, maybe even 6 tutorials together with his wife, Sage. He did an update by the video method, which is new for me. It seems to be working very well. Excuse me. And he was saying how trading is really like a university degree. He was saying that despite the fact that we've known each other for years, he's a great friend of mine, and had many, many sessions on trading. He picks up something new every time he talks to me or does a bit of an update to his Daniel Code qualifications. And yeah, okay, Terry. Let me break in here. I've got a note here from Terry Roberts saying, "Hi, John. I looked at your service offerings and note the SPY 200 is not there. Why would you mention it in this webinar?" Yes, it is, Terry. It's part of our TO3 signals and the blue line signals and the plus signals. So if you subscribe to the TO3 signals and the plus signals, you'll get all of the trades in the SPY 200, the code for which is AP. Now, there is a bit of a problem with that, because we can't do these signals accurately until we've got the end of day data from Trade Navigator. And that arrives, Terry's an Australian bloke, so we'll know what I'm talking about. We have our states here have different time zones. Some of them because they have different degrees of longitude. So obviously Adelaide's behind Sydney, and Perth, which is right over on the west coast of Australia, is 4 hours or so behind. So that's understandable. What the problem is, though, is that some of our East Coast states, for reasons known pretty much only to themselves, either do or do not have daylight saving. So when we are where we are now, which is not on daylight saving, Terry, that's fine, because the Trade Navigator end of day data comes out at 8:30. It's supposed to come out at 8:30 a.m. East Coast time, so I get that at 8:30 or later, where it's usually delayed, but it means I get the signals up and posted by 9:30, which is half an hour before the Australian Stock Exchange opens, which owns the Sydney Futures Exchange, where you can trade AP, the SPY 200 futures contract. The problem is then that as the year moves along, the southern states on the eastern seaboard, New South Wales and Victoria, go on to daylight saving. They put their clocks forward an hour, which is fantastic. Queensland, probably the state that needs it more than any other, does not, for some historical reasons. I mean, I've heard the argument, so there's always two sides to these stories, but it means that by the time I get to post those signals, the futures market in Sydney's been open for half an hour already when daylight savings in force. That's the bad news. The good news is that these signals are valid for 1, 2, or 3 days in the future, depending on which signals they are, and that's all explained on the website. Very often the best of these signals, the TO3s and the blue line, certainly are posted 1 to 2 days before they're due to bite, so you can have those and take advantage of them. Okay, so here's Matt. Yes, got a few grumpy buggers on the webinar today. Well, we got some people who are asking questions, Sage, and they're people who either are not with us or haven't been with us long and don't understand the joys and the beauties of what they're looking for. And here's Matt saying, I can vouch for that. The more I've looked at all the DC material after the tutorial, the more I see it. It is amazing. Matty was one of my mates up in LA. He's a new mate. He's an Aussie bloke, Melbourne bloke. She's a Sydney bloke. He's moved to Melbourne. He came up the tutorial. We had great fun together. I got to tell you, some of these guys had too much to drink at the tutorial, if there's such a thing, and there probably isn't, but certainly had enough. We had great fun with some terrific people there. Okay, so let's run through these 6-day charts. First of all, they're starting to the nervousness about the equities goes on now. I mean, I got to take you back to about June 09, all the way back here. You remember, those of you who've been with us long enough, that we forecast this low and told you the number and the day, and we were actually running a tutorial in Taupo, New Zealand at the time, so plenty of you knew about it. Once this rally out of 2009 started, we had the usual, oh, this is an Elliott wave correction. Well, the thing about Elliott wave, guys, is it's all in their heads, not ours, theirs. It doesn't work. My personal view, I've been saying for years, is that Elliott wave does more harm to more traders. They've lost more money than probably everything else combined. But nonetheless, all the Elliotticians were bellowing that this is only a correction, which on their measurement meant the market was going to go down to 400 pretty quickly. Well, as you can see, it's up at 2100 now. It is having a bit of a consolidation now, and there's a little bit of divergence between all these markets. And as I've said to you before, when all these markets are in sync, you largely expect the Dow, the NASDAQ, S&P, Russell to be doing much the same thing. Of course, there'll be individual differences, but much the same thing. And we continue to see this divergence between those markets. Some are hanging on, particularly the NASDAQ, hanging on better than the others. So none of this is anything to worry about at this stage. And if you're following this Daniel Code analysis, you don't have to be worried about it all, because I'll tell you when it's time to worry, and that's not now. And what we're seeing now, this red line you see here, is the fourth seal line, which accurately forecast the last high in the S&P back in late February, early March. Remember, this is a 6-day chart. Each bar is 6 days of trading. This is our basic timing chart. And the fourth seal analysis, available at the Daniel Code website, said exactly what it was. So Deepak, and you're asking, when is the S&P going to have a major turn? You can go and have a look at the fourth seal analysis. You can subscribe for it, and it will tell you when to get your antennae up. But the time is not now. This market is simply running along the median of the Daniel Code trading channel that it's been running at since March 2009. It's not as strong as it has been, nor is it as weak as it has been in previous years. So this is quite normal, but you don't need to worry about the S&P right now. I'll tell you when you need to worry about it, and we would have to see at a minimum a retracement to the 1 standard deviation, which is down at about 1950 at the moment, and that would be just merely a correction. So there's nothing to worry about. But of course, we've got to have the sorry, Sage, if the sound's a bit wonky. It's nothing at this end. We all appear good here. It may be that cable of yours that you've had problems with before. Okay, so nothing there to be of any concern. I wanted to show you a couple of other charts here that I think are important. And this is the Aussie US dollar chart, which has been just fabulous trading. We've picked every one of these turns. And what I want to show you is that these numbers down the side here, there's two sets of numbers because there's a number of different swings. This is your old high. This is the high on August the 2nd, 2011. These Daniel Code numbers here, these red lines, are retracements on a 6-day chart. Okay, so follow this off from the high, which is there. Perhaps I'll get my highlighter, which will make it easier to show you. So here's the high. So the market comes down. It broke through this first Daniel Code number. It rallied back up. It comes down, and it hits this number exactly. That's what these markets do. All markets are ruled by these Daniel Code ratios, and the red and black numbers you see on this screen are part of these ratios. They're the ratios when markets are correcting trading ranges. Outside those trading ranges, then the markets run on the blue lines. And of course, remember that what is an inside trading range correction on a 6-day chart is nothing of the sort on a daily chart. So we can never talk about trend and corrections without specifying the time frame that we're working in, because markets have more than one trend happening at the same time, dependent on the time frame that you're looking at. But suffice to say, we're looking at the 6-day chart, and I'm trying to show you it hit this first Daniel Code number at 95.73, rallied up big time. It came down, it ignored this next Daniel Code number and the next one, and lodged at this bottom one at 88.22. That caused this rally up 1, 2, 3, 4, 5, about 10 or 11 weeks, right up here where it retested the 95.73 from the downside. It then started down again. It found this number at 88.22, and it spent 1, 2, 3 weeks here before it could break through, and immediately said, oops, sorry, and rallied all the way back up to lodge on top of this 91.77 number, which it had ignored previously. This is typical market behavior. Then when it broke those swings, it started down again. You can see this bar here, the outside bar, right at that 91.77. It broke that swing and down it went fast. It ignored the 88.22, and then it came up to test that number from the downside. That's what these markets do. It then lodged at this 85.43, which is the 50% retracement. That caused a 2-week rally. It broke through that and it landed at the 80.71 number, and that caused a 3-week rally. It then broke through that and it found this red line, which is the Daniel Code fourth seal forecasting line, and that held it, and that's forced this 1, 2, 3, 4, 5 5-week rally up into this is the bar that's important. This is the one that shows you it was testing 80.71 from underneath, from the low. That tells you that this pattern is still active, and this is the swing that's being corrected. When you look at these big charts, or any chart, there's a number of swings, and by using the Daniel Code trading tool, the retracements, this stuff is so accurate that it will actually tell you which of the swings is being corrected, which for those of you who think more about markets is valuable knowledge. But the point is that even though this market was supported by the fourth seal, these things are just support and resistance, and because it's been running off this cycle here for so long, when it breaks here, which I expect it will do not too far in the future, you're going to see this market go down to 73 cents. And there'll be some great trading opportunities in the Aussie US dollar, as there have been for us lately in the Kiwi, the New Zealand US dollar. And it's interesting how some of these smaller economies are so dependent on single markets. New Zealand's having a shocker with their milk trade there. Those of you who don't know, New Zealand's a beautiful series of islands, two major islands, North Island and South Island, very imaginatively named. But it's basically a great big farm with lots of cows on it. And the dairy trade has been so lucrative in the last decade or so that people have been rushing to convert every acre of land into dairy farms. And New Zealand now produces, I should say, and exports mostly 18 billion, that's with a B, litres of milk a year. Now, the US produces 100 billion litres of milk, and Europe produces 140 billion litres of milk. But if you consider that US has a population north of 350 million, and New Zealand has a population of 4 million people, you can get the idea. It's a very small country, beautiful country. You can get the idea why milk is the mainstay of the New Zealand economy. And dairy prices, land prices of dairy have escalated so far, so extreme that for the newcomers, they need a price of pretty close to $6 per kilo of milk fat solids. That's how they measure it. To break even. And last year, after some record years, they didn't have that, and next year they're not going to have it either. And you're going to see some problems, serious problems, in the New Zealand economy going forward, because massive price rises create increased supply from other parts of the world. And that's exactly what's happening in the dairy industry now. Pretty simple. And the New Zealand dollar is tied to the dairy industry in the same way as the Australian dollar is tied to the iron ore industry. Every dollar move in the iron ore price means plus or minus $800 million in government revenues to the Australian government, to give you just an idea of how dependent Australia is and has been on the iron ore trade. And of course, we've had a record boom in prices for a decade at least, maybe a bit longer. Massive iron ore deposits are being mined and coming on stream. And that's why the Aussie dollar was up at those silly numbers like $1 and $1.08, completely artificial and created purely by government policy. And now that the iron ore price has come down from about $113, $115 to I think about $60, $65, you can see that's why the Aussie has collapsed. And what this chart is telling you is that the iron ore price has a few more spikes to the downside. In fact, this is a long-term adjustment. Traditionally, the very long-term price for iron ore has been in the $30 to $50 range. So even though it's screamed in the papers as being down and depressed and what have you, now it's not. It's just actually returning somewhat to its long-term trend. Okay, so that was stuff I wanted to show you. Gold, let me change my stylus here. Let's take a look at gold, because that's an important market to us. It's such a great trading market. I mean, I'm always amused by these I mean, gold has a full-time PR business going on supporting it. I mean, there's articles every day about, oh, you've got to buy and hold gold, buy and hold gold. Well, if you buy and hold gold, let's have a look at this. If you happen to buy at any time after 2000, you're out of luck. You've lost money. And all this buy and hold mantra, particularly for people who trade stocks, they don't quite understand that what buy and hold really means. Buy and hold is a fiction that initially was created by stock exchanges. And what they do is they show you these nice charts in equities markets moving from left to right, and they will say to you, this has been the story on the value of stocks over many, many years, and this market always rises. Well, that's actually not true. And if you and I were so loose with the truth, we'd probably be prosecuted. What in fact happens with indices, these indexes that are created by various bodies, the Dow and the S&P, all of these are indexes that are put together by various bodies who sponsor them, is that they are adjusted. And periodically markets that have traded shares, companies that have traded below a certain dollar value for a certain period of time are taken out of that index and replaced with the hot new thing. And companies that have become insolvent, gone broke, blown up, lost all their shareholders' money are taken out of that index and replaced by the hot new thing. So it is a completely manipulated picture to which I have absolutely no objection, but if it is used to fabricate this belief that markets always rise, then it is not the truth, because if you hadn't adjusted, and then of course the other part of that is that they are weighted, these indices. The markets with the biggest caps have the most effect in them. So it is an artificial construct, and this buy and hold belief is really code for saying, I don't know how to trade. And if you knew how to trade, I can assure you that there is far, far more money in trading than there ever is in buy and hold. And if you're a Daniel Code trader in particular, you will recall that right at this high, which should be September 2011, I told my tutorial class in Colorado Springs that was very probably the high in gold for the foreseeable future. And a number of our clients who were at that tutorial promptly went out and sold a great deal of gold bullion, and that market has since declined from about $1,900 to about $1,200 where it is today. So remember, this buy and hold is written and talked about by people who do not know how to trade. There is more money in trading than any other legal activity that I'm aware of. And if you want to become a very good trader, I can make you a very good trader. But as Daryl says, it really is a university degree. Nearly all people coming into this business are looking for little tips, little quick shots. They are never going to be good traders. If you want to immerse yourself in this, be very, very serious about it, I will make you a very, very good trader. You can come and see me and do a tutorial, or we can even do them by webinar now. And if that is a stretch on your financial resources, I'm happy to make arrangements with you for terms or finance or whatever it is you need. But the opportunity is there, folks. I hope you take it. So here's gold, which has found support at this 1138 number. And this is important support because it's been there now since November 2014. It's just been testing it. We're getting just sideways movements here. This last little bunch up here just saw the last swing take out the high and take out the low. So this is typical behavior you get when you have a consolidation. You would like to think, particularly if you're a gold bull, that this was a basing pattern, that you have a couple of higher lows in place. What I have to say to you is it doesn't matter. If you're a trader, you could care less whether this is a basing pattern or not, because we get paid exactly the same with the market going up as the market going down. The only difference is when the market's going down, not on this chart because gold's had a historic bull market, but in all other markets, you get paid a lot faster when it's going down. They are saying markets go up by the stairs and down by the escalator, and that's pretty true. So thanks for being with us, folks. Let me see what questions we have that you'd like answered, or what else you need to do. Let me go back to the moons chart and make sure Deepak can see the dots on this chart now. Can you see that all right, guys? Seems to be. Okay. What else do we have here? All right, well, everyone seems to have had a good time. I don't see any questions here. Let me see. Terry said, let's don't have the SPY. Yeah, we do. Okay, Deepak, you want to know when the S&P is going to have a major turn? Have a look at our, go to the Daniel Code website, my friend, and have a look at the, let me see if I can get that to open, show you where to go. Here it is. It's in here. This is called the 4 Seal. You can subscribe to this. These are the markets we covered: DAX, S&P, crude, natural gas. Let's have a peek what the S&P has to say to us for the moment. Here it is. This uses a number of different periods of the charts. This is the 6-day chart. And you can see that we've got the succession of 59s up here, all of which could signal a top. And here's the comment. You can see yourself. 62 cycle low is still holding up. Markets failed to make new highs. 59.6 could invert and indicate an upcoming low. And you can see the other cycles there. The important thing about this is that don't dwell only on the turns. Dwell on the money you can make in between the turns. You can see this historic chart here. The 62 is usually support. You had support there, and then it ran up to this 59 where it gave you a little correction. Knowing the trend in that period, which is 2.5 months, unknown to others, really gave you a huge advantage. So I do recommend that to you. The 4 Seal analysis comes out every week, and that's where you go. If you'd like a free trial of anything, here's the website. Just go and click on the free trial button, and you can get a free trial of anything we have. We don't market anything. We don't have any salespeople. If you want a free trial, go ahead, organize it with Terry. Try it for yourself. If it suits you, then you're welcome to subscribe to it. If not, no problems. Okay, well, Adrian enjoyed the webinar. Hello, my friend. And Michael, hello, Michael. I haven't seen you for a while. Michael was at the tutorial in Waiheke Island. He's a great guy. We had lots of fun. Let's have a look. He's asking about crude. Do the moon cycles work on crude? Now, remember what I've said. This is only the most basic moon cycles. All that's on here are new moons and full moons. Well, does it work on crude? Well, there's the high on a full moon. There's just after the high on a new moon, there's another high on a full moon. Let's have a look at this on a 6-day chart, which we can convert easily enough here. Might give us some more insights for you, Michael. Here it is. Well, this doesn't go back this far, but let's see where it does. We've got data for. Yeah, nothing there. Yeah, there's a couple of nice highs on the 6-day highs. This is pretty dramatic, isn't it? Down here, finding this low, that's pretty nice. These other two didn't, but there was no signal there either. Let's go back to the daily and crunch it up so Michael can see it a bit better. And there's what we've had recently. There's a minor high on a new day. This is the daily we're on. On the new moon, there's a top on a full moon. There's a top on a new moon, top on a full moon. Nothing, middle of a run there. Correction from a new moon. Nothing through here. The minor top on a new moon. Yeah, decent trading, Michael. Certainly worth looking at. Okay, Matt would like to see GBP JPY with a DC channel. Is that daily or monthly or 6-day charts? You want to see that, Matt? 6-day. Okay, let's go to our 6-day, and Matt wanted to see lower highs. GBP. Richard like to see natural gas. Just let me work through this one at a time, guys. Matt wants GBP JPY. Here we are. Here's a wild-looking chart, isn't it? Boy, there's some drama in here. I love this. And he wants to see a DC channel, please. Okay, let's have a look. And of course, these things start from highs and lows. So the latest feature on this chart is the low way back in September 2011. And we can start to run our proprietary DC trading channel from there. Now remember, these can be run from the low or the closing low. Either is valid. Now the important thing here is that the first push out, that's this first rally out here into November 2011, the upper channel, the one standard deviation on the upside, if the channel is going to be an up pointing one, has to maintain contact with that point and at least one other point, or it's not a valid Daniel Code trading channel. If it is a valid Daniel Code trading channel, the market will continue to run up this for very, very long periods of time. This is a 6-day chart. This channel starts way back here in September 2011. Here we are almost, well, 3.5+ years later, and look, it's still running within the channel. So we have to maintain this point. If we take this point off, it's no longer a valid Daniel Code trading channel and simply becomes a regression channel, which is what all software programs have, a regression channel on them, and they are meaningless. They will expand to fill any pattern, whereas if you use a Daniel Code trading channel, it has very specific rules, and it will tell you a whole lot about markets. And you can see that we've managed to take this all the way up to the modern day. That's as far as it'll go. It's right on today now. We still have contact with this first push out. We have contact with at least one other point. In fact, we have high, 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 and it's defined this low down here as well. If we remember, this is dynamic and it moves, so if we ran this back, it also defines this low and this low. And if you're not quite sure of that, just have a look what happens when you change this chart to a close-only chart. All Daniel Code signals are valid on bar high lows and also at the close. So for this little period of time, you can see that when the trading channel had only reached there, that would be at the end of October 2012, it defined these lows with a high degree of precision. This is one of the most important tools you can have and use, and you need to learn how to use these and how to draw these. In fact, I always start my tutorials by saying this is the first thing you should put on your chart. So there you are, Matt. There's your DC channel, and you can see that. And remember, if you're going to put these on, folks, once you learn how to draw them properly, make sure you take them off when you finish, because they finish up as an ANO file in your Trade Navigator software, and if you get too many of them, they start to clog the program up. Okay, so let's see what else we've got here. That was Matt. Richard Harris wants to see Nat Gas. Let me get you onto Nat Gas on it. Here's natural gas. And here, of course, you've got a number of trading channels. You'll have one from this low, then you'll have a failure and recovery, and you'll have one from this high. So let's put those on pretty quickly from you. You can start from the chart low or the closing low. Both are valid. I use the closing low whenever it's there. In this case, they're both the same, and that's the wrong tool. It's this one here that looks like the parallel lines with a wriggly worm inside. And off we go, and off we go. And we need to hold this first push out, and you'll see as we move this along, eventually it lets go of that, and it's now no longer a valid Daniel Code trading channel. Now, this is going to confuse you, but in fact it is, but you have to come to a tutorial for me to teach you that. It's a little bit more complex. It's the back end of the trading channel. Will allow you to move it to this position here, but if you had only held on to the first move out, the first push out, which is here, once it breaks, you would then go to 2 standard deviations. That's just 1. You can go to 2, you can even go to 3, and the rule is once it breaks 2 standard deviations, it's got to recover immediately, which it did here. And it got up, look where it went to, exactly to the median, and that's where it failed. And once it failed, you can take that off, and you can put on your next DC trading channel, which is here you have a high. This is the chart high, the gray bar, and the bar before it is the closing high. I would use that in a downtrending market excuse me, you need to hold on to the first push out, which is that one there. You can see we've gone past it, so this is no longer a valid Daniel Code trading channel. We have to back it up till we have contact again, which we do there. And you can see this is a typical breakout below, and we can probably look at this going to 2 standard deviations, perhaps even 3, perhaps even 4. This is a very, very dynamic move down, but you'll see how all of this market is always contained by these Daniel Code trading channels. I would prefer myself that to take this off and show you that we can, in fact, we have valid ways of extending this trading channel, which are available at tutorials, and that right there, for reasons you can't see at the moment, but tutorial guys will know why this is a valid Daniel Code trading channel. And if you can get this technique right, it defines all markets, and actually it does so in all time frames. Once you get the breakout above, you then go to your 2 standard deviations, which you see defines this high. This is exactly what's happened in the long-term chart in bonds, and that means that that's where your correction is going to come, as it did. And Newton's law would tell you that a visit to the 2 standard deviations on the high, equal and opposite should actually take you at some stage to the 2 standard deviations of the low. Now that doesn't always happen. You can see the 1 standard deviations held this market. It's gone from -1 to +1. It's pretty normal stuff, but there is a probability of getting a big push down to the 2nd standard deviation, which will be down here somewhere. Okay, folks, that's all that we have time for today. Might get one more, please. Let's have a look. Brian, I'll talk to you about that. If you make a note of your question, please, I'll talk to you about that tomorrow. We have a private webinar tomorrow for the guys who, folks who did the tutorial in Los Angeles, and the others who joined by the video tutorials. That'll be Dr. Dave and Sage and Mustang, and maybe Janet, who I don't know if she's here or not. But Janet, let me see if you're here, Janet. ABC, this is supposed to be alphabetical. E, F, G, H, I, J, 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 J. Lots of J's and Johns and Julie. Oh, Julie. Hello, Julie. And Justin. Justin Woolley. Hello, Justin. How are you, mate? There's my friend Marcel. Looks like Janet's not with us today, but she will maybe be at the webinar. So there's a follow-up webinar tomorrow, guys, for the people who went to the tutorial, and that's the first of 4. So after you've done a tutorial, you get hammered for private webinars every fortnight, 4 of them, and afterwards, of course, you've done that, you can always have a private conference with me, and we're determined that once you guys indicate a willingness to become great at this trading business, we will make you great, and nothing is greater or more accurate than the Daniel Code, which some of you know. Folks, thanks for your attendance today. I'm going to end the webinar now. As usual, good, Justin, glad you enjoyed it, and Peter. Good, Richard. Thanks. Send me your questions by email, folks, if there's anything I haven't covered. And as usual, those of you who are parents, you have to do everything for your children. My 2 children, both the university, have little 3 Series BMWs, which are subject to recall for the crash bag, which is faulty in about 860,000 cars in Australia and many millions worldwide. So I have to hustle off and deliver that car to BMW Gold Coast to have its crash bag replaced. You'd think if they're university age and they had a license to drive, they'd be capable of doing it themselves, wouldn't you? But anyway, that's why your mums and dads. Incidentally, those of you who've not yet embarked on the race to have children, I do not recommend it. You love them to distraction, of course, but boy, at times you really reflect on easier and earlier days. All right, I better not hear my wife say that she loves our children to the exclusion of all other things, but women are hardwired for that, I guess. Folks, lovely to have had you today, and I look forward to seeing you in a fortnight, which will be our next webinar. And do please shoot me your emails if you let me know in advance what you want me to cover. I'll be only too happy to do it. Thank you. Enjoy your weekend. It's actually Friday afternoon here. So for those of you who are not with me, you have to know I'm shortly after I've delivered this car, we'll be embarking on the Friday afternoon Bloody Marys, which we taught Rosanna to make so well up at El Segundo. And the only person in the world who can make them better is me. And I'll be doing that in about 2 hours' time. Enjoy your weekend, folks. Thanks for your support here today. And do let me know what you'd like me to discuss at the next webinar. Bye-bye.